Hi, good morning, good day. It's Friday, 17th August of 2018. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. We will have a nice start like every day, and we will start with our disclaimer. Good morning, good day to all of you. Forex and CFD are complex instruments and can come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and the personal risk management. If you like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. Also, the differences between retail clients and professional clients. From August 2018, there's a new regulation in the European Union by ESMA regulator. So if you are retail clients, the maximum leverage you get in a live account will be up to 30. As a professional client, up to 500. Retail clients will have an additional protection against negative balances, unlimited. Professional clients will get our negative balance protection policy, a protection up to 50,000 British pounds. In a demo account, what we're all using here in a webinar, you still can choose a high leverage up to 500. More details about that on admiralmarkets.com. This is the topic of the year, ESMA, important changes, and the picture shows more than 1,000 words. If you traded the DAX or the euro dollar before the ESMA regulation, you need 24 euro in this example for DAX 30 or euro dollar just 200. And now you see via the graph what is the new margin requirements. If you believe you are a professional client, you can apply for the status. You see some differences here. Like I said, unlimited protection against negative balances for retail clients and professional clients up to 50,000 British pounds, what is round about 70,000 euro. More details on how to apply via that link, what you see here displayed. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices. So my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And on Friday, like today, it's Dirk's Day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, many benefits only available with us. For example, DAX 30 euro dollar, 0.8 pips or points, typical spread during main trading hours without additional commission. Also here, all details on admiralmarkets.com. Same like the contact details, you can call us, you can send us email, and same like regulatory background, everything is to find on admiralmarkets.com. Enough from my side. Now it's time for the day trader of today. Dirk, good morning, good day. What's your view to the markets today?
So now I'm going to transmit my screen. There's nothing showing up. All right. Good morning, guys. Good morning, Jens. Welcome back. I guess you had a perfect holiday. Sounds like it. So let's check out the markets and a couple of, let's say, trading goods. As you can see in the platform, to the downside here at the very left side, let's just hit this Tesla button here and just scroll back into the last week of Friday, because I spoke about the Tesla short and Tesla short scenario and the full story around it, and that you guys should check out what is going on with Elon Musk and his tweets. He's twittering like the president, and now the SEC is showing up, and we'll check out what went wrong and what the whole story is about. And it looks like this story is going to hit Tesla much more to the downside instead of the upside. So let's see if that blue box is going to be reached. We drawed that one last week at Friday. So there are 2 blue boxes here. To the upside, you see there's the gap between the 364s, 367.70s, and to the downside you see that the other gap right here. Okay, enough for Tesla. I'm not into single stocks too much, but I'm just want to give you a heads up before we start looking at the DAX and, for example, at gold. Here you got to see the stock, the single stock of Bayer. So Bayer got hit much because of this Monsanto takeover, and with the Monsanto takeover, they got a couple of problems in the USA. So one guy, for example, sued Monsanto because of using some kind of treatments against plants, and so he got cancer, and that's why he sued Monsanto right now. And the court in California gave him way over in direction 300 million. So if this is going to be the case, and if this really is going to be so-called mirroring case for the next cases to come, this will be very expensive for buyer. As you can see, the share dropped the last weeks. Even the share dropped a lot, and billions of market capitalization, of market cap, went down the river. So there's a huge gap on the weekly here. Go to the daily here. This is something like shoot it with gaps. Just check that out with a short Fibonacci analysis, going from this last low here to this last high. And we really shot all these Fibonacci levels, even like the 161.8. And let's see what, for example, the RSI Relative Strength Index tells us. This stock is massively oversold on the daily. If you check out the weekly, we are already in oversold territory with 26ers, and even if you check on the monthly chart, we are very close to get oversold. So this is kind of maybe right now would be something like catching a falling knife, which is of course very dangerous. And of course everybody tells you to somehow trade with a trend. But if there is a trend, look at this stock right now. The only thing, of course, what could happen is a sudden placement in the US that these guys won't be successful in suing Monsanto anymore, and those would be getting a relief. You all know the stories about Deutsche Bank and all this stuff going on in the US against them a couple of months and even 1 to 3 years ago. And this is something which really battles down, which really knocks down a share and a full story. And this is what happens to buyer right now. So if someone is really into that and is going to be working himself into that story and of course into the technicals on top of that, this might be getting a cheap deal for a little relief rally between $5 to $10. Okay, that's buyer. I'll be closing that one. Let's check out one trade I made this morning, set up this morning. This is gold. The gold price 11.75. Okay, we can tell it right now. Is already the same with the stop loss here. So the stop loss is already moved to the entry. We're going to be losing nothing. It's just a mini. The target of this one, just have a look at the daily or even at the longer term chart. Where is all this stuff coming from? This is simply a trade of the 61.8. Okay, and we're closing that to give you a little bit more room from the chart side here. This stuff is at the 61.8, and if you go to the longer term analysis, you will find it on the weekly, that you will find a low. That's a low of, let's say what it is. It's around 29th of November 2015. We got a low at 1046.38. Then we went up the road until the marker of the 3rd of July 2016 with a high of 1375.13. So these are the 2 points where the Fibonacci analysis is taking place. And this gives you a hint later on where the platform shows you the 61.8 level, which is around the level we are hovering around here right now. So this could be the case that there is something like a little bit of a relief. Let's see what happens to that trade. If it is going to be stopped out, okay, we didn't lose anything. We might be checking out another level to buy in. Another level to buy in simply shows us something like the historicals. We see a lows at 11.22, where we could possibly step in a little bit above that, or a little bit around that, or a little bit underneath that. So that's the next scenario for a bullish reverse. Nothing like that any longer. If you see that, just taking it down the road here, and very much oversold right now. Here, even at the weekly, we are at 23 right now. From the relative strength index. So this is something where you can see from the 50% here, for example, where you can see a little bit of a target. The target could be on top of that. Let's see what the pivots tell us on top of that. just drag them in here and just see where a possible next target, even from pivots, are assigned. As 1183. The resistance 2 is 1193.83, and the resistance 3 is 1205. I would say if you go to the chart side and then just from talking about the last levels where we stopped, or where we tried to get something like a bottom, you see all those lows around 1204, 1205, which would be something like a next target zone for a relief to the upside as well. So let's try to do that with a typical blue shape, and we'll just drag that here around that 50% line. Just think about it. It won't be the 50% Fibonacci. Just don't give it too much of a meaning. Just look at these last lows here, and this should be something like your to your target here. Okay. Okay, before we go to the DAX, just a short story about all these rumors and all these stories about emerging markets and Asia Forex rates and all these kinds of rumors about contagion from this Turkey crisis. There are a lot of stories to be written, and a lot of stories already written. But one thing for sure, if you look to do that, maybe while we are having a look at the euro-US dollar, excuse me, at the DAX. If you have a look at all these currencies, like the Turkish lira, like the Chinese yuan, or like the Russian ruble, or whatever, South African rand, all these kind of currencies got beaten down the road. That's one thing for sure. Just because there's one thing, a global thing happening, that the US is going to be hiking, and the next rate hike possibly is in September. And whatever happens, this is something like a big so-called carry trade going on, dragging out all the money from the emerging markets in direction to the US, and this is strengthening the US dollar, just because they know they're going to be getting a nice interest rate there, which is much more safer than the huge problems they might get in countries like Russia, Turkey, and whatever. Okay, contagion risk. We have been talking about a couple of banks last Friday. Last Friday we spoke. I spoke shortly about banks, European banks, with a little bit of an exposure, Turkish exposure. I spoke about BNP Paribas. I spoke about BBVA from Spain, and I spoke about UniCredit. Let's just check out how severe that kind of contagion risk or exposure of European corporates to Turkey is. If you gotta check that out via some economical research stuff, you will find a couple of listed European banks who together have around together. I'm not talking about one single bank. Together have around 110 billion lending exposure to Turkey. So 110 billion lending exposure. And this is on top of that, for all those numbers, this is on top of that 1% of the total loans of the total outstanding loans they have. So if you look at those banks, already spoke about BBVA or about BNP Paribas. If you look about the exposure, the most hidden exposure is BBVA, which with the highest amount of exposure. But if you see that together, it's still not enough to talk about absolutely contagion risk coming into Europe, or coming into the euro, or coming into European banks, just to kill them. That won't happen. It's not big enough. What is big enough, what is really damaging, and what maybe a lot of guys don't really want to see, is Italy. And if you look at Italy and Italian bonds these days, you will see that 2-year runners have more than doubled, and in the longer term, like 3 or 4 months, almost tripled. At a 10-year runners went up to the road, almost hitting the floor around 3.2%, and coming back a little bit today, but they are still mounting up, and this is something like showing us that the Italian debt, so the budget plans of Italy's new government, is the real problem in the Eurozone. Okay, what has it to do with the DAX? well, check out check out all this stuff. For example, give it a little bit more room here. Because of those Fibonacci retracements, we had the last low right here and going up to this last high from let's see what it is. It is the level of 13,205. If you look at the DAX, it's 13,204, I guess. And you check that out and see that we are still hovering around the 61.8 level here again and again. And let's see if this horizontal line takes place here. And this is something we try to get hold with. And if you see the next targets to the upside is possibly this 50% level, but what is much more interesting, of course, is the next one here up to the road 38.2 level, again at 12,600. If you really get there, this would be the next turning point for a short, I guess. Just because we got a little bit of a downtrend here, and this would take place here as well. Look at this trend line. Drawing that little trend line here. I guess I like something like an ugly color right now, but just still leave it like this right now here. On top of that, we'll be looking at indicators, checking out where this DAX right now is hovering around on a daily basis and on a weekly basis. Just checking out that one. Is nothing like oversold. It's very close to that, but it's nothing like oversold. And on top of that, we will be putting in this trend lines, so-called moving averages, and we'll place that at 100 and checking out this 200 moving average here, just to see where we are trading around. All right. So this would be even the case if you get up there a little bit, we would be at this point where the moving average is going more to the downside a little bit, and the 38.2 gets touched, and the descending trend line is even scratching that one. So it would be a nice level to place a short, or if you are from the bullish view, take the next trade into this direction to the upside to take a profit around this levels of, let's see, around this levels of 12,600, something underneath that. All right. Okay. Check out the maybe more interesting story these days. The next days to come, we will be having a little bit more to know about Italian budget plans. What has it to do with the German bonds, with the bond future? Well, a lot. The bond future, as you may know, is a so-called like a safe haven, still a safe haven play. And if you check out these current negotiations between Italy and the European Union about budget plans, about reduction, and about something like a special role for Italy. Especially after all these kind of a big trauma and accident happened in Genova, with the bridge collapsing, and then Italy blaming that they should be paying more and be able to pay more for infrastructure and stuff like that. It will be very interesting how the ECB will be able to maneuver and to give us traders a hint that they won't be doing something extra, sending extra money to Rome, just because you need to be aware the ECB is ending this program of buying bonds at the end of December, and it's not quite clear how they are going to hover around that story with Italy right now. It might be the fact that Draghi is an Italian and he might be doing something special for Italy. You never know, but it would be very dangerous to do that, because the whole Eurozone is on top of that. Okay, check out these levels, typical levels, like the last high to this. Let's see if that is correct. Let's check out this 159.37 and 159.37. So, and this one here as well, 159.44. Okay, so no matter where it got hit, 159.37 is the bottom here, and the 164.19 is the top. This is the next level to crack for the bulls. And if you see those projections to the upside, you will see those horizontal lines marking those 138.2 Fibonacci and 161.8 Fibonacci at the top, which will be something like the last big move to the upside, I guess. We've spoke about this ending of the bonds, of buying bonds by the ECB, and right now we see the problems occurring and running into Italy, like the budget plans, and then they're not going to meet the rules, they're not going to meet the Maastricht criteria and all that stuff together, and they won't be able to spend more. So this will be getting into us with the euro in trouble, and on top of that, this might be the last safe haven play into this upside before bonds are getting hit and the market is getting hit, because when the ECB stops buying that, we will be having way less liquidity. All right, let's just check. I'm checking that at another screen for you. Let's just check where the Italian bonds right now are hovering around. So if you check that at Italy government bonds, you can do that via whatever Bloomberg, CNBC, Reuters, whatever kind of terminal you have or kind of websites you're just opening. If you check out the Italy 2 years runners at 128.2, and Italy's 10-year runners are at 3%, 3.12. So it's still way above the 3% marker. And the more problems are coming up. This will be going to be to hit the floor to the upside in direction 4, 5, 6% when we get in real big trouble. When you go back to the crisis levels have been around the 6-7% marker. Hopefully we never get there. And hopefully something like a special rule for Italy has been made, that this is not going to drag down the Eurozone into a black hole. Okay, targets to the upside are drawn up here. I will do that with a blue box on top of that. Let's just use that shape. Moving that one here to the upside as well for the 61.8 level. Oops. This was the one I wanted to move. So you might see the most possible target to the upside here, and I would say the target would be something between those levels here. It won't go to the upside to 166 or more. Imagine the more you see something like 160, 65, 166. In direction to the upside, that means that the German 10-year government bond will be getting down to zero. Of course, we already had that in history. It's not far away, but I'm sure that's not going to happening in this time again. Possibly Germany government bonds and others like that will be getting hit one day by less liquidity and will be getting down the road. So if we by accident get a spike to the upside, this is a nice invitation of the market to get a new short. So this it could be the turning point of another story as well. Okay, Jens, I spoke about a couple of markets, a couple of stories right now. Is there a special market clients are wishing for?
The time is our limit. So for today, we already have 54 minutes.
Yeah.
So I have to say goodbye. Tomorrow is another day, but tomorrow is weekend, Saturday. So the next business day is on Monday, 5 days a week, 5 different traders. So if you like, we see us on Monday again. And if you'd like to see that again, a couple of hours later, it will be available as a YouTube video on our YouTube channel, youtube.com/AdmiralMarketsFX, and you can see it again and again and again. Thanks, Dirk. Thanks to the audience, and yeah, great weekend already now. Bye-bye.
Bye-bye. Have a great weekend.